All right, here now to react to all of this is Ned Ryun. He is a GOP strategist, former presidential writer for George W. Bush, and the founder and CEO of American Majority. Thank you for joining us, sir.
Absolutely.
What do you think of what's going on in the market today? You think it's a reaction to all that spending?
I think that's part of it. I mean, at some point, people in D.C. are going to have a serious conversation. I mean, Melissa, the spending in D.C., you think about what we spend most of our federal money. I think 70% is on entitlement, welfare, and our debt payments, and now we're talking about spending even more money. At some point, we have to have a serious conversation about D.C.'s spending habits. At some point, you actually are going to have to figure out how to pay for things. And I don't know if we have enough serious conversations with people right now between Republicans and Democrats in D.C. about what the future looks like. At some point, you're going to have to pay the bills, and we're, what, $20.6 billion in debt now. It's a pretty staggering figure when you think about what that all entails and how we actually get out of that hole. So I think that's part of it. The other part that's a little mystifying to me, to be honest, Melissa, is, in 2000, the tech bubble burst that was based on pipe dreams. 2008, based off subprime mortgage crisis. You look at the market right now, and I'm thinking interest rates are going to go up because of a conservative Fed, and returns are going to be down. Therefore, stock prices are going to go down based off returns being down. I'm like, the fundamentals, when I'm looking at these things, we had 50,000 more jobs in January. Wages are up the highest since they've been since 2009. You're seeing small business saying we're going to take compensation up to rates that we haven't seen since, increases since 1989. So I'm sitting here going, yeah, I think all the fundamentals are good, but we have a situation in D.C. that I think at some point we're going to have to deal with. And I'm not sure that Republicans or Democrats have the actual political courage to say we have to deal with Social Security.
No, they
we have
don't.
to deal with Medicaid, Medicare, because at some point, those things are going to start falling apart. And, looking into the future, I've got 4 young kids. What does their future look like if we don't get our debt under control? And I'm not entirely sure we have the political courage to deal with it right now.
No, I don't think we do. And I think that, maybe some people thought that if we drain the swamp, that might happen. But this idea that they've just signed up for all this spending right now makes you think, well, now there is officially no one in Washington who has any interest in curbing. But let me go back to your first point when you talk about the fundamentals still being strong, because that is for sure true. And the only challenge to that out there is if interest rates go up, how much does that cut into the profits of companies? But we've had guest after guest come on today and say, you make it up everywhere else. We've got all this cash on everybody's balance sheet. You have banks making more money because interest rates are higher. Everybody's earning more money on the money that they have sitting around if interest rates are higher. So you spend more to borrow, but you're making more everywhere else, that it just balances out. Maybe this is about soaking up the ridiculous liquidity that's been sloshing around everywhere as a result of the Fed, and we've seen that in wild bets. What do you think?
So I've talked with some buddies that are professional investors. They obviously started moving into harder assets months ago because they thought, hey, there's too much easy money right now, and at some point that train's going to stop. People are going to start to understand interest rates are going to go up, the market's going to correct itself. So I asked him, I'm like, are you seeing anything that I'm not seeing in just the fundamentals of the economy, jobs, wages, all these things? Nope. It's just a course correction. These things were bound to happen. We don't think that there's anything fundamentally wrong, although they did tell me they think there will be more of a market correction moving forward. Yeah. But I want to go back to this really quick. We're not actually draining the swamp. No. And we talk about spending increasing. Melissa, the only way we actually drain the swamp is you have to break apart the administrative state, which is the foundation of the swamp. And again, I don't see the political courage on either side of the aisle to actually go in and say, you know what? We don't have to have 2 million federal government employees. We don't have to have $136 billion in spending on those government employees. And why the heck do we have 430 departments, agencies, and sub-agencies right now? That was never what we envisioned for our government. We have to start breaking that apart. We break that apart, then we start to drain the swamp. Then we can actually have real conversations about what future government spending looks like. But until we actually break apart that administrative state, we are going to have trouble talking about future spending.
Soon. I mean, this is all you're going to make me cry here.
I'm sorry.
We all know it's true. We all know anyone who can do math knows that what you're saying is absolutely true, and you're right. I don't see the political will to do it, but maybe when the wheels fall off, they'll be forced to do it. There you go. Last word, go ahead, yeah.
No, I hope that some people will start to make this a campaign issue for 2018 so that Republicans can say, you put us back in the majority in 2019, we will actually take a serious run at entitlement reform. We will actually take a serious run at how do we shrink federal government employees, government spending, shrink the size of the departments and agencies in D.C. That's how we start to make real progress in draining the swamp.
The second one I could see them doing. The first one is much tougher. But Ned, thanks for coming on. We appreciate your time.